Hello and welcome to the Rupee Rakshak news of 15 September 2023. This is our 5th episode. I'm your host Raghu Rao, and this week we are going to bring you some latest news and some key information that can help you decide how and where to invest. Rupee Rakshak news is brought to you from the newsroom of FinMo, a SEBI registered investment advisor. Our financial advice to you is backed by extensive research into the world of mutual funds, stocks and bonds. Last week was an exciting one for the gold investors in India. Sovereign Gold Bond Series 2 was up for subscription from RBI, and RBI pays you an annual interest of 2.5%. Further, there is a discount of 50 rupees per gram if you buy this bond online. Gold earning interest every year, what can be better than this, considering that you also don't have capital gains tax if you hold this bond till its maturity. So if you think you missed the bus and didn't invest in this bond, then look out for the next issue of SGB from RBI. Speaking of bonds, let us look at the bond market updates for the week. In the bond markets this week, the yield on US 10-year government bonds closed this week at 4.241%, a weekly decline of 0.077%. India's 10-year government bond yield closed at 7.13%, showing a small weekly decrease of 0.52%. In the commodity markets, Asian oil prices edged up this week due to supply constraints, and the attention now is on economic data from US and China. The surge in oil prices takes a break as US crude inventories increase significantly, also accompanied by the production increase. So therefore, US crude oil stocks are up 4 million barrels this week, first climb in 5 weeks. Among the Rupee Rakshak bond baskets, the top 3 government bonds this week are the Government of India GSEC with a coupon rate of 8.3% and the GSEC with a coupon rate of 7.54%, followed by the GSEC with a coupon rate of 7.41%, all with a yield of around 7.3%. So all these government securities are AAA rated, sovereign guarantee, pay half yearly interest, and they are the best replacement for your bank FDs. Among the Rupee Rakshak bond baskets, the top 3 state government guaranteed bonds, which are issued by the state-owned entities and backed by a guarantee from the respective state government, are Meghalaya Energy Corporation Limited with a coupon rate of 10.55% and a yield of 9.7%, followed by 2 UP Power Corporation bonds, one with a coupon rate of 10.15% and a yield of 9.6%, and the other with a coupon rate of 9.75% and a yield of 9.2%. So Mohan, bonds buying or selling also involves a lot of charges and taxes. So can you please throw some light on the charges involved in buying or selling a bond?
It's actually the easiest question what you have asked so far in taxation, Raghu. One is, bonds are nothing but FDs. So what is a government bond or what is a corporate bond? It is as good as what you are depositing and you are getting an interest. So whatever taxation is applicable for a bank FD, same is applicable for a bond. So you need to know what is a long-term capital gains in bond or in debt instrument, what is a short-term gain. Now here short-term means 3 years. Less than 3 years is short term, more than 3 years is long term. Now they have leveled it. Earlier capital gains for long term, more than 3 years, used to be have the indexation benefit. It used to be you could reduce the inflation for the long term benefit, and short term used to be on par with your income. So whatever is your income, if you are at a 30% tax bracket, you have to pay 30%. So short term was always common. Whatever is your income tax slab, that is the taxation in every, whether long term or short term, everywhere it is the same thing. You have to pay 30% on your bond interests also. Now there is also a new thing that is introduced, a method of TDS deduction. Now normally bonds, when you buy, you have a periodic interest payment, either quarterly, half yearly or yearly payments would come. There is a deduction of 10% already happening at the source. So if you are supposed to get 10,000 rupees, you get only 9,000 rupees. You don't get shocked if you get less money. There is nothing wrong with the contract, nothing wrong with the interest payment. There is only problem that there is a TDS that is happening. Now, can I avoid this TDS? Same way how you can give that 15H and letter to the bank where they don't deduct TDS. Same way there is a portal link available and you can go there and upload your 15H. Accordingly, they will not be deducted. The TDS will not be deducted.
And also this capital gains that you mentioned, capital gains tax about the bonds. So that is applicable if the bonds are bought and sold in the secondary market, right?
Absolutely.
And not applicable if it is held till maturity?
Yeah, absolutely. See this, because capital gains in the bond is the purchase price different. The bond is like an FD, like I said, whatever you have agreed on the interest what you are giving is an interest income. Now, it will qualify as an interest income. Now, if you are making gains on the purchase price, let's say you bought the bond at 10 lakh rupees and when you sold, normally you can't sell it if it is pre-maturity, you will get little higher value depending on the demand supply. In the market, let's say you got a good price, it was in good demand and 10 lakh rupees worth of face value, you sold it in the secondary market at 10 lakh 50,000 rupees. That 50,000 rupees is your capital gains.
Okay, yeah.
This is only applicable if the transactions happens before maturity, because at maturity you only get face value.
Yeah.
So there is no question of capital gains in bonds.
Thank you so much, Mohan.
Thank you.
That's the bond market updates for you this week. Thank you for watching Rupee Rakshak News. If you like our news and views, subscribe to this channel on YouTube and visit rupeerakshak.com to see our bond baskets in action.